back to Crypto RFQ and welcome back to Patrick Heusser. Welcome also for the first time, Rupertus. Thank you both for joining us today.
It's a pleasure to be back. Thanks a lot, Tina.
It's a pleasure.
Thank you. It's a pleasure to be here. Thank you.
Yeah, so Rupertus, you've recently joined the team at Crypto Broker AG as the new CEO. Before we get started, would you like to tell us a little bit about how this move came about and maybe a little bit about your background?
Sure. Well, I've been in banking for the almost entire career life, spent over 25 years in various investment banks, being active in the space of equity derivatives trading, options, futures, structured products, and all this kind of stuff. After 20 plus years being on the banking side, I decided to change the side of the table and started working for the Stuttgart Stock Exchange, being responsible for infrastructure trading and customer services on an exchange level. From Stuttgart in the past, at the end of my 6-year stint, I was part of building the Bison app in Stuttgart, which deals with cryptocurrencies for retail customers as well. In April 2018, I decided to leave Stuttgart and joined the SDX6 digital exchange project, which I believe was and still is probably one of the most fascinating projects of the kind in the field of security tokens, tokenization, including an exchange platform, financial market infrastructure licensed by the Swiss regulator, including the CSD solution. So this is the initiative where a financial market infrastructure provider is aiming for a standardization of the tokenization space. It's a very ambitious project, and it's taking time until things are settled and done, but it's still ongoing. I was always challenged by the crypto space. I believe cryptocurrencies is a fascinating area where retail and institutional business are crossing lines. And when the opportunity came up, and the group CEO, Jan Brezek, asked me, Rupertus, we need somebody with gray hair to run the brokerage business. Would you be willing to join us and help us moving into the next step? I was actually honored. And of course, I decided to come. I've joined 6 weeks ago from now. And I must admit, what I've seen so far is really fascinating. It's an energetic team. It's a good mix of young and old, experienced lads, and everybody here is willing to drive this new technology, this new business into the next level. And I must admit, I'm really looking forward to be part of this journey.
Well, we're always delighted to see some of the more future-focused, gray-haired, experienced people join this emerging space. We do need some experienced guidance along the way, and you've certainly chosen a really interesting time to go straight into crypto. So welcome to the industry. It's great to have you.
Thank you.
Patrick, you're an old hand here. So, speaking of the wild and wacky world of crypto, let's take a look at the recent crypto price action. It's been a pretty crazy start to 2021. Bitcoin's hit an all-time high price breakout at around $42,000. And we've seen, I think what many expected was a pullback over the past couple of days, which seems to stabilize around $34,000, $35,000. What's next? Will we expect a sell-off? Will there be a consolidation period? Is this a brief pause? Are we at the ceiling? What do you think?
It's a tough question. I need to go back to some of my reports I did in the past where I said I would like to wait for the blow-off top. But the 42,000 top didn't or had not the structure of a proper blow-off top.
Yeah.
The correction now was, in hindsight, fairly obvious. We have seen on-chain a lot of Bitcoins moving on exchanges between 40, 42,000, then they sold, they pulled the trigger pretty much all at once. And we then saw a reverse of stable coins coming back to the exchange. So meaning the guys who sold their Bitcoins coming back and trying to buy it back with their stable coins.
Right.
This is now basically the phase where the market starts to stabilize because these guys are now bidding the market, getting back their coins. I would say consolidation is on the way right now. There is a level which I'm watching very closely, that is 29,000. If we break it to the downside, it's going to get ugly once more. So let's see if the market is trying to have a run at it. At the moment, it doesn't look like, but just keep in mind, it can go up as fast as it can go down.
Well, absolutely. And we've just seen that happen. So, in line with, this Bitcoin rally, obviously Bitcoin pulls along some of those other tokens with it. And ETH also toying with a new all-time high. So, Bitcoin's historically tested, as you said, and then pulled back. And, whether or not there's a breakthrough or not. Is the same dynamic in play here for Ethereum?
To me, the value proposition between Bitcoin and Ether is completely different. So I wouldn't say that the same sort of market forces are driving the price, but certainly there are breakthrough moments in the Ethereum market with the 2.0 launch that happened just before the year end.
Yeah.
And obviously a lot of action on the chain on the back of the DeFi sector, booming and trending. So there are other forces driving the Ethereum price, but it definitely, within the hype, it's one of the coins that will push for the next few months to new highs. I'm certain on that.
Okay. The last time you were here, you noted a change in order book dynamics for BTC since institutional buy on hold strategies had kicked in last summer. What changes have you seen since? I mean, we've seen a lot of institutional activity or talk of that. What does that mean for demand?
Well, we had quite a few changes on the order book structure. One change, which is a bit unfortunate for me, watching the order book closely, is that a lot of exchanges started to implement iceberg ordering. That means you don't really see the big chunky orders in the order book, so they're not popping up. You only see it if you watch the price and the order book all day long to see if there is a constant bid or a constant offer coming in. But that's definitely an institutional, let's say, toy. So there is still institutional money flowing into the Bitcoin market, and it's executed smartly. So these order running through the whole day, either on the bid or on the offer side, and just being constant in there. But it's very hard to detect them through order book measures or other tools. What I can say though is up here between 35,000 and 40,000, the order books are very, very empty. Not a lot of people are putting in stale orders. They're not feeling that comfortable to do that. And as well, from reports I made or stuff I said in the past, is the sell side liquidity crisis is imminent. It's still here. So if the price is pushing up, there are not many orders coming in, and there is not much that can stop the price when it starts to roll again.
Okay. Yeah. Let's switch tack a little bit and take a look at the derivative space. So we're seeing continued options growth and open interest on futures. What's looking interesting in this space?
Well, I'm not the option specialist, but what I can see and have observed is that the volume on options has basically grown faster than the volume on futures. So there is more more sophisticated guys are coming in and placing their bets in the option market, which is a sign of the market is maturing, because this is probably the last sort of, let's call it, difficult instrument to play with. On the other hand, we see the CME open interest on futures growing just every day. There is a lot of interest in the CME futures contract, even though I must say it's not the best product to play with if you have other options to play in the futures market, because it's not open 24/7. You have issues with, or you need to place a lot of collateral if you want to play it on the short side. So there are quite a few restrictions there, but still, because I guess institutionals can only play with that instrument, the volume grows there quite significantly.
Yeah.
If I may add, Tina, we've seen quite some interest coming in from market experts on the derivative space, creating auto-callable notes using the extraordinary high volatility for Bitcoin, for example, in providing payouts which simply look tremendous. I mean, we should always keep the risk in mind, which are embedded in such a structure, but auto-callables with 6-month tenor and providing 25% yield if the Bitcoin underlying spot doesn't drop half of its value looks predominantly quite exciting. And we've seen more and more of these type of structures flying around. So it seems that a lot of institutional investors, I think these products are purely done for institutional space and experienced professional investors. It demonstrates that, first of all, the more products you sell on the structured product side, the more options you need to hedge in order to cover your risk. So that could be a driver for the volumes in the options market. And secondly, what it means is there is still a lot of interest in institutional space, which are looking for participating somehow in the value generation of Bitcoin, but do not want to touch Bitcoin directly because they don't want to be involved in wallet management, key management, trading, brokerage, storage. So they use the alternative in options and futures and structured products in getting access into it. For us, it doesn't really matter as long as the hedge is done with us. We're happy in providing markets and liquidity for structured products as well.
Absolutely. Okay, Patrick, one more market question on miners. So miners seem to be selling down inventory, which is common as price rallies. What indicators are we seeing from the mining sector?
Well, it's quite funny that you bring up that question now, because yesterday, Poolin, one of the biggest mining cloud pools, started or issued a token where you can participate at the mining profitability, but not actually being or not actually having to run a mining operation. And these kind of tokens have been around, but now this is one token which really is trying to capture the revenue part of the mining side. Obviously, the mining industry is trying to get some liquidity through these tokens.
So and like a staking of mining?
Well, you buy the token, and then if you want to stake the token, you can. And on top of it, they made it, let's call it that, fancy due to the DeFi hype. They also issued a governance token on top of it, so you can provide liquidity for the mining token and the governance token, and get more of these governance token back as a yield. I would say for the retailer, not the best thing because it's quite complicated, right. But for the mining industry, a good thing.
Interesting. Yeah, there's a lot of interesting happening in the DeFi space for sure. The antithesis to that really probably is the securities and security token space. So Rupertus, you have an application in for a securities license, and a number of firms globally are already licensed, including your former employer, SIX. How is that ecosystem maturing and developing? Are we starting to see more demand? Is liquidity improving? CSDs were a big issue before. That seems like that problem's, getting solved. What are your predictions for the market this year?
Yeah, that is an exciting one because the entire space of tokenization, blockchain, distributed ledger technology is very much driven by, first of all, trust in a new system. Secondly, unfortunately, still almost everybody, and everybody meaning all the financial institutions, banks, asset managers, they're using proprietary solutions. Everybody has done his own proof of concept. Everybody has done his own MVP. I know from my previous days at SDX that almost every bank on the planet has done a POC in can we tokenize a bond, can we tokenize equity, can we tokenize a fund, and one is using Ethereum enterprise solutions, one is taking R3 Corda, the next one is using Hyperledger, and everybody is happy with what they do. So the need of a standardization on one technology is extraordinarily difficult. I think it will be extraordinarily hard for anybody, not for SDX on its own, but for anybody who wants to create this kind of exchange solution with a standardized technology behind, to find the right mix. I personally believe it can only be solved by providing instant interoperability. It doesn't matter with which technology and blockchain protocol you come to an exchange. It must be made sure that assets can be stored adequately and can be moved from one ownership to another on-chain adequately. This is the key to be solved. We are waiting for our license. I think we are waiting. The question is rather a question of days, not weeks anymore, and definitely not months anymore. We are pretty much advanced. And others, I will let, and this is without being rude to other exchanges and regulatory entities. What is extraordinarily lacking is a first world approval. You can easily capture licenses with outside Europe, outside US, outside first world G8 countries exchanges, but trust me, nobody from the big players, no UBS, no BNP, no Morgan Stanley, no Citibank, nobody is moving their assets for their clients to Gibraltar, Malta, Estonia, Cyprus, or Miramar.
Yeah.
You need to have this kind of stability. It must be a EU MiFID regulated entity. It must be a UK entity. It must be a US or Swiss entity who gets the license. This is what's needed. And unfortunately, that has not happened yet. So everybody is still struggling. And it's not easy because the reason why the Swiss market is so much advanced from the rest of the world is very simple. The Swiss regulators have enabled what they call the Wertrechtegesetz, which is the dematerialization of a security 8 years ago. I think these guys didn't even think about blockchain and DeFi when they did it. But as a matter of fact, the Swiss environment, legally and regulatory-wise, is clean, crystal clear. This is what you can do with securitized assets. In Germany, in France, in Italy, in UK, in Singapore, you have to change the law first. You have to create the law that enables dematerialized securitization and issuance of product. You have to ensure that a portfolio report can contain tokenized assets. Even if I am able as a bank to issue a security token, how is the position being monitored in my client's portfolio? Is it an ISIN code? How is it visible? How is it risk reported? So the entire core banking systems need to be adapted to this new world. This is not going to happen overnight. I mean, SDX has an adaptation time of 6 to 8 years until they believe this market will be, let's say, liquid and running around like the legacy business is working now. It's not going to happen overnight, and it needs more big players to be part of these kind of standardization initiatives. Otherwise, it's going to be really difficult. And it's you cannot stop your old world only because you suddenly start tokenization in the new world. You will have to run 2 separate sessions. You keep on doing on exchange equity and bond trading and listing, and you do parallel tokenization digital on DLT. So it means, in the first instance, you add cost to your business rather than reduce cost to your business. Yeah. So these are kind of the critical issues which have to be solved. I'm fully confident it's going to happen, but it's not going to happen overnight.
Got it. Okay. Speaking about, that regulated piece, right, which is obviously, imperative, especially in the security space. We've seen more a move toward regulatory clarity in Europe. I think that things are becoming clearer. The US is still having, a number of commercial issues coming up with different tokens, etc. On a positive note, we saw last week, I think, the OCC permitting banks to use public networks for settlements via stablecoins. So, in the pro camp, and then equally less positive, the U.S. Treasury issued a last-minute consultation over the Christmas break, which was odd, for a very short period of time, regarding implementing KYC for non-custodial wallets. So, Rupertus, in your thoughts, what do these conflicting regulatory policies, coming out of the U.S. tell us? That they seem to be in contradiction with each other when you're looking at regulatory sentiment. How do you think that that's going to impact specifically the institutional space?
Yeah. Well, on the one side, the US-American financial market as such is of such importance to the entire global financial market space. You cannot simply ignore it. No matter what difficulties and face wind comes from the States, you cannot ignore it. I think it is an illusion to think the Europeans do their thing, the Asians do their thing, the English do their thing, and the Americans, we don't care. Unfortunately, in the globalization of financial markets, one interacts with the others. Mm-hmm. And this is not only visible in the financial regulatory space of tokenization and stable coins and digital currencies as such. I mean, we've seen initiatives in Asia, in China, in Hong Kong, in Singapore. We have seen the Banque de France real digital euro transaction going through as we speak right now with a bunch of important participants in the project. We've seen SNB working on a digital Swiss franc in order to start in the institutional space for making payments easier, faster, and cheaper. And then again, you see the Americans who seem to be extraordinarily protective on the one side, on the other side, questioning. I mean, you're probably very much familiar with the case of Ripple, where suddenly years after being active in the space, somebody has the idea, well, maybe Ripple is a security kind of token or a utility kind of token, and it's not anymore a payment token, and suddenly a different regulatory rule book applies, and suddenly you can threaten them with you have misled or misinterpreted the existing law. It is extraordinarily hard to predict what the Americans want. One thing is for sure, so far they have created the only future contract in the currency space, which is interesting. On the one side, they are very protective, very regulatory driven. On the other side, they enable the institutional space to trade on their futures market as the only really liquid future on the planet. So there is always this kind of, you can't really read them well. Do they want to push it into the good, or do they want to protect it into the bad and make it more complex? I'm sorry, I can't give you a clear answer on their strategy. On their strategy, I think nobody really can. But as much as we are growing internationally with the crypto broker platform, we are concentrating more on Europe and and in the APAC region, exactly for the reason I've just described, because it is very unpredictable in going west, and suddenly you stand in front of a situation where you onboard clients which are not eligible, taxation is an issue, the nature of the product is unclear. So we want to see clearance first before we enter into the US market space.
Yeah, well, I can certainly see that from a commercial perspective, but Patrick, looking at the market has a reaction to what the US considers doing or starts to do. How have you seen over the past couple of weeks the markets respond or react to some of these regulatory policy proposals?
First, maybe I can add some valuable comments on the regulatory side. What as a global observance is that regulators sort of gave up trying to regulate or break down the product and let's say Bitcoin. Mm-hmm. So they know they sort of missed the point of no return. So Bitcoin is here to stay. So what the regulator is trying to do, which I believe is also quite sensible, is he's now trying to force all the virtual asset service providers around the Bitcoin network or the Bitcoin trading space to be regulated, to make sure that whatever money goes in and whatever money comes out is properly looked through, and we know the people or the traders interacting with that new financial sector are clean. So that makes sense. And yeah, some regulators go very aggressive and want to even control every non-custodial wallet. Others, like the FINMA in Switzerland, they just say, well, we just want to have the VASPs, the virtual asset service providers, regulated, and the rest is fine with us. On the market side, on the price impact side, Ripple obviously lost an awful lot of ground by the SEC announcement, because it's not only straight to Ripple itself, it's to the founders as well, a bit like BitMEX, where they went after the CEO and the COO personally. So the market took it quite grown up. Only Ripple fell. A few smaller coins where the market has linked a high correlation to it, like Stellar, has fallen too, but then it catched up and people realized, okay, that this is just an isolated incident on Ripple, fine, can happen. When you look at stable coins, and by naming it, if you look at Tether, which is by far the biggest stable coin we have, if the regulator will push into Tether and basically take out the big hammer and say, you cannot trade with Tether anymore, you cannot use Tether as a VASP or as an exchange or as any interaction with it, that would send shockwaves through the market, sure. Definitely. Sure. On the other side, what they also do, and I don't think it's that visible to the trading community, but they also try to make sure that the other stable coins like USDC is getting to a regulatory level where they feel okay, the regulators, and where the market participants feel okay too. So you would have an alternative. Mm-hmm. So then I think there will go we will see some fights on the stablecoin side, but it's in the end it's going to be positive for the crypto trading space. Okay.
Well, gentlemen, thank you both so much for joining us this week. It's been a crazy couple of weeks, so we appreciate you breaking down the markets for us. We were just great to have you join the community, and we'll have you back and
thank you.
Take a look at what's specifically moving around in that institutional space, because I do agree with you, it's probably going to take a number of years, but I think that the process along the way is going to be quite interesting.
Sure. Thank you very much for having us.
Fantastic.
Thanks a lot for having us.
Thank you.
Always a pleasure.